that Sam is, I guess, a delusional narcissist who's trying to use big words and sort of explanations to explain away something very simple, which is that millions of or a million plus customers trusted him with their hard-earned money. And rather than honor that trust, he reached into it, lent it to an affiliated hedge fund, which made wild trades that would only profit him personally. I love that FTX US may be solvent and may be able to return customer assets. I think it's great news that Japan can as well. FTX International should have been able to do that too. And despite all the words in that incredible interview, you can't get away from that core fact.
I've got to ask you, because in so much as what FTX did was, and reportedly did, I should say, because we don't have the finality, but in so much what they did was inherently wrong, right? And you've got a raft of these other players that are finding themselves in similar situations for different reasons. You just think of Three Arrows and the like. But to you, in terms of just how this ecosystem operates, is the core problem the fact that you had a lot of activity, a lot of trading activity, if you're talking about these collateralization of assets that are wildly volatile, all the leverage that was taken out on them, all the staking, all the lending that just isn't necessarily the most stable kind of environment? Do you think that that's really what has ruined this system, that there needs to be some significant changes in just how it functions and how it operates?
Yeah, I think if you look at crypto and you look at what worked, there are two things that worked exceptionally well throughout this incredible drawdown and crises that we've gone through over the last year. True DeFi worked incredibly well. Even the Alameda loans on DeFi platforms were repaid because it's code and it operates automatically. Fully regulated platforms like Coinbase in the US and many others worked perfectly. They custody assets appropriately. They keep their books appropriately. What happened here was that there was this dirty middle of offshore exchanges that have established themselves offshore to avoid regulation, where there wasn't as much clarity, and all of those have gone wrong. Now, you articulated some of the reasons they've gone wrong: because of lending, because of over leverage. When you lend and over leverage a highly volatile asset, bad things can happen. But the real issue was that you can't have centralized intermediaries that aren't regulated. They don't deserve our trust. There's still a few in crypto, and you're seeing them, as you said earlier, sort of migrate toward these poles, migrate toward more regulation. We'll exit this eventually in a better place as an industry, but there's going to be continued pain as we clear out that messy middle.
We'll speak